All right, welcome everybody. It is Thursday, April 24th, 2025. All right, rocking and rolling here today. Markets are up another 90 points or so on the session. Pretty good day on no real news, just things are up. On yesterday's news or whatever information you want that, maybe Trump's going to soften his stance on China. Uh, I don't know. We'll see. We'll see what happens. There, you got earnings. We're in the middle of earnings. Earnings seem to be pretty decent. Netflix had phenomenal earnings. If you're owning an airline, maybe not such a great time for you. But if you're in Netflix, if you're in the markets right now, we've had a nice move off of the lows. So let's look technically at where we are and look at a couple different trade opportunities. And I think Igor and I have given you guys a bunch of different unique trades over the last couple days. So we want to make sure that you maybe fully understand those. I know Igor went through Greeks and such yesterday, so if you guys haven't checked that out, go ahead and do that. So some good stuff there, and you really got to understand how the Greeks are working in conjunction with your trades to see how you want to adjust and move forward with that. So that being said, let's rock and roll and look at some of the charts briefly, and then I want to get into these trades more than charts. So let's rock there. I'll get off the screen. Beautiful. There we go. All right. Here we go, rocking and rolling. Through. So this is an intraday chart. You can just see we opened up this morning and really didn't get a big gap up. We just got a rally up, rallied up hard for the first hour of the session up to about 54.48, and then it's been just a slow drift higher throughout the session. On the 15-minute here, we are starting to roll over a tad, maybe a little bit overdone. We are overbought on all the metrics. On the 3-minute now, still some opportunities to continue to move higher here. So do we just keep drifting? Is 5,500 a magnet? Well, we'll see on the session today, but this is our day in a nutshell. A little sideways action, breakout, sideways action. Do we break out sideways? We'll see, or do we actually start to give any back? But we're up 94 points now on the ES future. So everything is up. Let's jump into the weekly daily charts here. In fact, we'll look at this, but I want to bop them back and forth between the 4-hour charts as well. We'll talk about why I want to look at 4-hour charts. But here we are, downtrend. The big thick blue line still in place on the E-minis here. I've been calling it the downtrend of death or the trend line of death. Either way, because until we break this, then we're still in this bearish downtrend. Once we break it, then we look to see, do we retest and then continue to move higher? We'll see what happens. We're getting awfully close. And this little blue line that you see drifting across here, pretty much the neckline of this move, but it's the high of this previous rally back on April 9th off of the lows. So we bounced off the trend line back to this spot, which was a previous pivot point, failed at it, came back down, but we have a lower, I should say we have a higher low here, and now we're going back up. If we break this line at about 55.30, 55.29, we break that higher, well, that would establish this as not only a higher low, but then a potentially a higher high. It should coincide with breaking this downtrend. So we break that downtrend anywhere in this area above 55.30 here, then pretty good news that we at least have on the short-term time frame, the daily, we've established higher lows and higher highs, and the trend has now seemed to have reversed. On the weekly chart, okay, you're still in a series of lower lows and lower highs until we get way back up into at least back up into this 58.30 level here. So 58.30-ish or so, I can draw that out. But this previous pivot here we would need to get above that thing. Let's make it thinner. Uh, Boom. Okay. So this would be at least the next, spot to look for on the weekly chart where we have, a higher high, higher low. This would be the higher high on the weekly. So we got to get above that 5,800 level, but baby steps, right? Baby steps. All this is not bad. We'll see what happens. Uh, Here we did have, I talked about it yesterday too, when you have this pattern of a gap up and a bit of a evening star slash shooting star pattern. And then if we would had gapped down this morning, that's a pretty bearish sign. Didn't happen. It's all good. So we continue to move higher. And when you're in a move higher here, this thing is more of a inverted hammer, which can be a bullish candle as well. So all things look halfway decent on the daily chart on SPY, and certainly good for our accounts recovery and where we are. All right. So there's ES. And what would I, if there's any trades to be had here, to me, again, I think the 112 trades are still the best opportunities, removing risk to the upside. If we do roll over, because we have not broken this downtrend, then we have a trap to potentially catch the bears in it if we move back over. So I think the 112 is a great opportunity. Strangles, I think, are starting to get to be back on the table. If you're looking at this weekly chart, I don't mean to stick around here too long. I'd like to get back closer to the 21-day moving average, but we are moving up, moving closer to that. We are still at the lower end of the Bollinger Band, bottom of the Bollinger Band ranges here. I'd like to be more middle centric, but if you would like to strangle here, I would go shorter term, not longer term. I did see one of the members putting on a strangle shorter term. I think it was Neil in the member trades threw on a 45 DTE strangle. I think that's the best play if you want to strangle right now. Is just keep it shorter term, like the 45 days, and just manage your trade. So I don't think it's a bad move. It doesn't fit my setups exactly, but I think if you're shorter term, I don't think that is a bad move at all. All right, oil continues to be in the downtrend line. We're nowhere near breaking that trend line. We have started to establish at least a little bit of a short term inside of this longer term trend line of death here. We have a little bit of a shorter term uptrending line. Given back a little bit, we're hanging right on this trend line. It doesn't have to be exact, but it's somewhere in this neighborhood, give or take. Oil indicators moving up, MACD moving up, RSI moving up, stochastic momentum's moving up. We're also seeing somewhat of a little bit of a turn and recovery on the weekly as well. Not bad. I'm going to continue to trade 112 trades in oil here. Oil volatility on the futures is the IVR is about 35. So there's still some decent juice in oil. I think you've got overhead resistance, things like that to look for. I know there's a lot of lines all over this, including this anchored VWAP that's up here. I don't think we go up forever. I think this thing will start to eventually just keep moving sideways. And if it wants to drift higher, lower, I don't think strangles are a bad opportunity here. I would like to see us get closer to this uh, line, but I'd like to get closer to the 21 EMA, which is around 68 for strangle opportunities in oil. So for me right now, 112's still a good opportunity. I'd love to catch the bear if we drop here and remove any risk to the upside. I don't see a lot of upside move in oil, more downside move, but I'm not at a point where I want to strangle it at all right now. Gold's had that nice pullback. I don't know if the pullback is over. That may be all you get. I don't know. But as the markets continue to move higher, gold typically is going to move a little bit opposite. Now today, gold is moving up with the market, which is not my favorite thing in the world. So there's still a flight to quality, flight to gold here. We're in a 112 on gold, which I still think is the best way of playing gold right now. We are up now 47% in just 10 days. I like the trade. Would I do it here? I probably would. A decent pullback. I would love to get closer to the 21, but 10 days ago when we put that thing on, was somewhere right around here. We're not far off of that, but I liked this break that we had here. Draw a line. This breakout here is where we put the 112 on. I felt that was a pretty bullish move that I thought we could go higher. Either a 112. Had I jumped in here, this would have been, in my opinion, the better play. On gold was a, oops, deleted the trend line. It gets thicker. Okay. This trend here, this was the opportunity move here off of the anchored VWAP in the trend line for something like a naked put or put credit spreads. But up here, I think a 112 is fine. If you come back down, touch the 221 or even the anchored VWAP again, totally fine. So I do like our gold 112 here. I'd stick with it. I'm fine with that trade in here. I'm going to let ours just keep percolating. And then when it comes off, maybe I'll look to put another one on. I'm not going to increase risk by putting on multiple gold trades. Bonds trying to recover off of the lows. If we're looking at rates, so the U.S. dollar hit some previous lows here. I think this is a 3-year. Let's say we got to go all the way back to 2022. So March of 2022. So this is like a 3-year low from March 7th of 22 till today. So we're at a 3-year low on the U.S. dollar. I don't see a big reason for this thing to recover anytime soon. Long-term trend line is way up here. Secondary trend line, which is a little bit more steep, still here. We're still below both. No reason to get real bullish on the US dollar, which means I'm still watching rates. Rates have come off a little bit of their highs. We had popped almost all the way up to almost 5% on the 30-year, and then it's dropped all the way to 477 now. So we've had some decent pullback here, which has given bonds a chance to get some footing and start to move up. I think bonds are not in a bad strangle position. I know Igor's been doing the covered strangle, so if you guys are not paying attention to that, I think that's not a bad play. Getting short bonds here or taking assignment on the strangle to the downside, and then I haven't followed it quite enough to know if he's continuing to put on covered strangles. But once assigned, I think just writing the put and the call on those and taking in premium from both sides. I don't really see a huge. This was a big nasty move a couple 2 weeks ago. But normally I don't think you'll see that. I think this is what you normally see is stair stepping up, down, meandering around, and your weekly moves on bonds are typically 4 points at the most in bonds this week. I mean, from bottom to top, 85 to 89. So again, 4 points. That's usually your move. And if you're looking at expected moves on bonds for the next week out, we're at $2 for the expected move for next week, and about $3 for the week or two after that. So again, normally you're in that, I would say, $4 range on bonds as your expected moves. All right, there we are. And then VIX has been again reverting back down. We're now at our lowest point since April 3rd. So it's been a long, nasty trip on this, and we're finally getting volatility back into the upper 20s, breaking the 30 here. I still think it is going to remain elevated until we start to see some repair of this, trade stuff. Not one single country has agreed to any tariffs with the U.S. at this point in time, despite everybody calling the U.S. and wanting to do it. I'm not being political here. I'm just saying until we start to see those shoes drop, I think you still see some elevated volatility. But I think a couple of people have pointed it out this week. I think it's really good to point out that it's not necessarily the news that's important, it's the reaction to the news. that matters. So it's why we pay attention to price as opposed to the news. I always, have said that news is noise. Well, yes, the news is out there and the markets are moving, but it's the markets reacting to the news based upon how people are already positioned. If the news seems favorable, and you can get who was it the other night that came out with, no, Tesla, it was Tesla, I don't know how I could forget it. Tesla came out with what I thought was pretty pathetically bad earnings. Okay. Really, really poor earnings, not a great outlook, not good revenue, yet the stock moved up. So again, it's not necessarily the news, it's how people are positioned and reacted to it. Was a lot of that already baked in? Had people just already beat up Tesla and sold it off, assuming that the quarter was just going to be hideous anyway? And we took this thing down from 480 to 220. I mean, a 50% cut in Tesla, and the news comes out. So sometimes it's not just the news. And look at these earnings. We missed 34% downside surprise on earnings and a 9% downside surprise on revenue. And the stock has run up from 232 to 255. So we got a 20-point bump in Tesla after absolutely crappy earnings. But again, it's not the news, it's how people react to it based upon how they're positioned. And I think you have to pay some attention to that. Jeff, I think Igor's talking about I believe, TLT. So I think we're talking about the TLT trades. Igor, if I'm wrong, you can correct me on that. But if you're looking at trades, I think trade 3077 for Igor is a TLT covered strangle. In that case, he's long the stock now, assigned, I believe, uh, and then writing strangles against it. So, and if it rises up, he'll get the shares called away. If not, he can decide what to do on the downside. So. There you go. The covered strangle is a awesome tool. That is my preferred method to the wheel in most cases. If you remember my uh, YouTube video on I hate the wheel and how I trade it, well, it basically covers I hate the way most people trade it because they trade crappy stocks, number one. And number two, I prefer the covered strangle over just the straight wheel and selling covered calls. Um, if assigned. So if you've got a quality underlying that you believe in, and bonds should be something solid, uh, then covered strangles, I think, are the way to go. You get two opportunities for premium on it. All right, let's keep going. I digress here. So we covered everything through bonds, why bonds are kind of holding their own right now, having a good day today. So good stuff in bonds. Copper starting to make a move up. We talked about this being a potential strangle opportunity. The only thing that makes me nervous about copper, and again, I'm going to make it a news thing, but is that China holds a lot of these precious metals that the world needs. And if they decide that they're going to hoard these or charge exorbitant prices, because we know the US needs specialty metals at times, and we don't have them, and China does. And I think that's important here. So I think hoarding copper or charging higher prices to the US or anybody else for copper can drive prices higher. I still think this is not the worst strangle opportunity. I was more excited about silver from a strangle opportunity, but this is also running up. I think you have to watch precious metals here a little bit until you see some softening of this US-China situation. China's not the only country to have precious metals, but they got a lot of it. Okay? And they're a big old country that has it. So I know that's why the US is really trying to get a deal done, potentially with Ukraine, for their precious metals as well. And again, nothing political, just if you want something that someone else has and they know you need it, they're going to charge whatever the heck they want. All right. So I hope that makes sense on this. I don't want to cover too many other futures. I did talk about the Aussie dollar being something that I think you could look at a strangle opportunity. I'd love to see this thing just kind of mellowing out here, especially with the US dollar starting to put in some base. here, I think this thing might settle down a bit. All right, there you go. And then just looking at some stocks, the little orange circle, as all of you know, if you've been watching any videos, uh, is the death cross. That's the 50 crossing below the 200. That continues here. The 50 continues to worsen and get farther from the 200. When that stops, when that distance starts to catch up, then I think you can start to look at things being a little more positive. It's starting, the 50 slope is slowing, which is a good thing as we start to inch up towards that. And we're breaking above the 21 here on Amazon. So again, not saying all is clear. Trend line of death in place. We're trying to break through it. One day does not a trend make or a trend break. So we won't go all hog wild on Amazon. However, I think you can speculate a bit, and I did today just buying some long calls on Amazon, all at risk, right? Same thing with NVIDIA here. Okay. Trend line way up here, but you also have a secondary trend line down in here. Okay. So primary, secondary, NVIDIA has a little bit more work to do. I think that gives you a little bit more opportunity for them to run up before you got to be concerned. Hood, uh, trend line of death was broken. I can take it off the screen now. It's not really a big deal. They have broken through that. This could be a nice double bottom. What you want to start to watch now, if you start to break through, and I'm going to use this pivot point on the left here, and I'm going to draw it across. That looks pretty doggone good, huh? So this previous pivot point over here, okay, which we have used as support, as resistance, and now does it become resistance again? Nice W pattern. Okay, so maybe a potential double bottom in here. If we break this line, okay, then we could potentially rise that same amount, which would be probably somewhere up in here. Great drawings, I'm sure, for you here, but this is why I like Robinhood. We're heading into earnings coming up. Every other bank that's had trading related to it has had massive increases in trading revenues, which is why I'm really bullish on Robinhood. And I do like the fact that they're adding additional services for their potential clients. And they know their clients. They know what their people want. And if they give them a little bit more services, they're going to start competing with the bigger brokerages for the retail type of a trader. Maybe not the person that has 5 to 10 million, but the person that has, 50,000 to $1 million is a good customer for them. Those people, as their accounts may grow and they get more sophisticated and they age, are going to want some of those additional financial services. In fact, yeah, maybe Schwab will buy them. I hope not. But I like Hood more than SoFi. Hood could become what SoFi wanted to be. And SoFi is just still a wannabe company, and Hood could actually, get into loans and financials and all of that stuff. And they have the customer base now to leverage that. So anyway, a lot of stuff on Hood, but I do like Hood here. We're long. We have on Hood, we have the covered, we have the covered call, or the poor man's covered call trade here, where I bought the leap, and then I sold the 44 call, which we are now in the money by 3.75 points or something, which was fine. The whole goal here was short-term trade. Earnings are next week, and you can see earnings over here. So earnings are coming up next week. I was going to be out by earnings or even hold through earnings. I don't really care. If we get assigned, I'm all good with it. But I'm going to close the entire trade. It's just a simple, basic trade where I'm not going to sell covered calls every week. I just wanted to sell one covered call on a leap at a very high delta, so it would track the price movement of the stock. So far, my long leap is up 23%. The short calls are down, but there's still extrinsic value left. The entire trade is up 11% in 2 days on Hood. If you wanted to take profits right now, we absolutely could. We'll take a look at that trade. So I do like right now. I'm using a lot of trades that we probably don't put on that often in Income Navigator. So hopefully these are valuable to you. But I'm using long calls right now, a little bit, not many. I'm using poor man covered calls a little bit right now. I'm using short term poor man covered calls. I'm using buy rights. We're selling naked puts, short term. Anything that generates cash flow for me in this market environment with higher volatility at these lows doesn't mean we can't go back and retest the lows. We're traders, and my goal here is to keep cranking out cash while the market figures out what it wants to be when we grow up. And we've had a good couple weeks on this. I think what last week we were up almost $9,000, and this week we're going to be up. We're already up 3,500, not through the first 3 days. So we are generating a lot of cash returns here, and that's the goal. We just keep generating cash as we go. All right, sorry, I hope I didn't get too far into that for you. Palantir, just like we talked about with Hood, Palantir has that, a little bit of that double bottom. And I know we're talking stocks, and stocks is not my favorite thing. I would rather trade ETFs all day long, but there are a couple stocks that I will trade. But Palantir has this double bottom with this neckline right here. And if we break out, which is happening, which is a big breakout right now, this distance that we fell is the same distance that we should rise, probably somewhere up into here. So this is where I expect Palantir to head to. Maybe short term is up to that 125-ish mark. Am I going to bet my farm on it? No, I don't have a farm, but if I had one, I would not bet it on Palantir. But we do have a Palantir. All I did was buy calls. Okay, no risk, well, low risk, I should say, because all I can do is lose the premium that I paid on the calls, and those calls are up. Not normally an Income Navigator trade, but you're breaking these trend lines, you're breaking these key points here. Google breaking out of the trend line of death yesterday on a pretty good gap and running more today over the 21. This looks pretty nice in here. We'll see how it gets, if it gets above this anchored VWAP, which is this white line that it's heading into. But to me, that's also another one of those. I don't know if it's if we draw it exactly, we don't have to be perfect, but looks like it's pretty doggone perfect. Pivot low, okay, a high on that day, a pivot high. So it's flipped from support to resistance here. We're heading right into that. Looks like everything else. The key is if it breaks through that, then I think we really start to run a bit on Google. It's not my favorite company, but something to take a look at. All right, I don't want to get too much farther into it. And then Mags, Igor and I have both talked about this stock. It's a nice smaller version of the S&P. So if you're looking at the S&P, okay, how does it look? I know there's a lot of stuff on here. I got to erase some of these things, but the double H pattern. I know there's a lot. Let's redraw this thicker downtrend of death line. Okay, right in here. Okay, so taking a look at this, you're right at the downtrend of death line. We are in this death cross with the gap just widening like the Grand Canyon between the 50 and the 200. But we're approaching we're approaching that 50. So we're starting to see maybe if that starts to flatten out. But if you looked at Mags, to Igor's point as well, it's the exact same looking thing. So if you're of a smaller account, potentially trading Mags is an opportunity. And I do actually have that running as a poor man's covered call, or it's actually not a poor man, it's actually a covered call trade. I own the underlying shares, and I've been writing covered calls against it. All right, that's enough. I don't know if there's anything else I want to cover with that. Let's take a look at how the day is going since we started talking. We're just in this range. Again, just slowly drifting higher. We've now broken 100 points up on this session. So we're now up 100 points on the day. The 3-minute looks pretty strong. The 15 looks pretty good. And we can continue to just drift higher. So it's just a melt up kind of a day. All right. And then the last thing I wanted to touch base on, because I want to get some trades, is let's look at the 4 hour. Not something we normally look at here. For me, is the 4 hour. But if you're going to be doing some, I don't want to say swing trades, but swing trades are technically just shorter term trades. Doesn't mean we're swinging something. It's just a shorter term trade based upon what we're seeing. Well, if you remember what we were just talking about, where you have, I'm going to use MicroStrategy here as a, oh, that's a pretty nice line. Okay. Okay. Resistance, 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 but you have this whole big, maybe a triple bottom on MicroStrategy. Okay. At least a double, if not really a triple bottom on MicroStrategy. And right now, we're just trying to get above this neckline. If we can break above this neckline, which we're starting to do, now earnings is coming up on this thing. So got to be a little bit of aware of earnings. I think earnings are next week on MicroStrategy, if I remember, on May 1st. So got earnings over here, which is May 1st. So earnings on May 1st, MicroStrategy. I think we could still run up into earnings. I like the fact that we broke, came down, and then maybe we could bounce off this and continue a little bit of a run higher. I want you to remember this because in about 5 minutes, we're going to look at a potential trade on MicroStrategy. Again, why are you doing stocks, Tom? You hate stocks. I do hate most stocks. Uh, but right now, I think there's some potential setups if you're doing it right to make some money on it. And I don't want to be anywhere near this thing on earnings, but keep an eye on MicroStrategy as we go. Uh, is there another? There's one more stock. Oh, and I want to touch base on one more thing here. So I'm sorry if we're going a little bit around. Okay. I also track 3X ETFs, and these 3X ETFs, the use of these ETFs can be pretty beneficial because while they're 3X, which means they're going to swing 3 times more than the market. The market goes up 2%, this could go up 6%. Fantastic. But the market goes down 2%, you can lose 6% quickly. The market goes down 10%, you could lose 30% in these. Okay? So they're not to be taken lightly, but UPRO is the 3X of the S&P 500. What is nice about some of these 3X ETFs, and I don't look at all of them, I only have a handful here, but most of these are fairly decently traded. I'm not going to say they're the most liquid things ever, but for shorter term trades and for some things I'm going to cover today, when you want to do like a buy right or something, I think these set up really well because it gets a little bit more volatility and they're a little bit lower price and it allows you to get in with a little bit less risk on these. They're still risky, but with the buy right, I'm okay with it. But look at, we're back to this trend line. Can we get above this thing? I don't know. Are we going to fail at it? Who knows? We don't know, but this is the S&P 500, and we've already looked at the S&P 500. So the chart looks exactly the same, right? We're right at the trend line of death here. If we can break through this thing, I think we run higher. So is it a great trade right now? Not yet. Okay. TQQQ, which is the NASDAQ, same thing here. Okay. I didn't really draw the downtrend line. This is the 4-hour chart. But if I'm looking at the downtrend line, what do we notice on this that the S&P doesn't have is that we did break the downtrend line. We still have this neckline to break. Might be an opportunity here to get long. I don't know. It's pretty, it's up a bit today on the 4-hour. So you can see we've been moving up on the session today decently. Is it a great trade? Maybe not yet. I would love to see on this 4-hour chart the break of this neckline. If you're looking at it, is this helpful? By the way, if anybody does not want me to cover stuff like this, let me know. But I'm trying to give you some trade opportunities. And if you look at the trade here on the hourly chart, I'm sorry, the weekly daily, we are starting to, again, break through that, but we were looking at the 4 hour. We know we broke it, and we're heading up to this resistance area here. I think if we break through here, this thing could be a good run, maybe even tomorrow. I don't know. The Soxel here, the SOXL, is your semiconductor 3X. Again, very volatile. Don't just go crazy here, okay? Because these things are 3X and we're going to make a boatload of money. But I think this thing's breaking out of the downtrend. Everything here looks pretty good in order for this thing to move. You just flipped the PSAR from bearish to bullish. Might be a decent trade opportunity. Again, short-term trades that last like a week or two, maybe even a week. I don't know. But hey, we're traders, so this is not investing. This is trading. Okay, TNA, this is your small cap 3X. Okay, I've traded this in the lazy trader account as well. I'm not as enamored on small caps as I am on some of the other stocks, but this thing's starting to break out there. But you've got to, I think really it's these lines up here that are important to get to. Right, so we want to get to those, but you're breaking above the 21, you're heading to the 50 on the 4 hour. These things look decent on the 4 hour. Okay, we're not overbought on any of the charts that I just showed you. RSI is rising, but it's only in the 50s, not in the 60s or 70s. So I think there could be more room to roll. Now, DPST is the regional bank 3F. Why, Tom, did you pick DPST of all the things that are out there? Okay. Well, here's what the banks look like. Okay. Beep. Let's go trend line. Okay. And we're going to come down here. We're right at the trend line on it. But look at this weekly. RSI has been, starting to rise. The MACD has been starting to rise. So we're coming off of these extreme lows the last 3 weeks on regional banks, okay, especially as rates are dropping a bit, and you're seeing bank earnings coming out that are pretty doggone good. All right, so daily chart looks really, really good. If I'm looking at the 4 hour chart, it looks pretty good as well. And there's a gap up here to fill on the 4 hour. Okay. Lots of little things to take a look at here, but we got a gap to fill to the upside. We're already above the 21 EMA, hitting the 50 here. Can we run up to here? I think so. And I think that's also where you're going to find some potential resistance. But I think we're going to take a run at this level here, which would be pretty much the gap itself. Okay. So almost the bottom of the gap is the support level or resistance level on this thing. So I picked DPST today to do a buy right on. This is why. Okay, mainly on what the charts look like. And then real quickly, there's TMF, this is your treasuries. So if you wanted to do the bond thing on something that has a little bit more juice to it, well, there you go. We're in TMF in the lazy trader. It's not been a great trade for us right now, but we own the shares. So we'll let this thing hopefully just do its magic. Then there's BITX, which is the Bitcoin. This is a 2X Bitcoin. So if you're bullish on Bitcoin, here's where we are on Bitcoin. And then there's also MicroStrategy, a 2X. So in case MicroStrategy itself isn't volatile enough and you want to get some excitement in your life, you can look at the MicroStrategy 2X ETF to give you twice the volatility of MicroStrategy. All right, that's enough of that. Let's go look at some trades and rock and roll with a few trade opportunities. So give me a second here. And let's switch screens. I always say I'm not going to spend much time on charts, and then I do. All right, so here's where we are today. We're having a really nice day in the account. Oil, it's still down a bit with that 112, but we're not even near the trap, much less the naked puts. I'm fine with where oil is. Down a couple $100, no big deal. ES, we have one naked put here. The naked put we just sold for the next cycle, we closed it out yesterday at 50% roughly in 2 days. So instead of waiting till 90%, I close it out at 50% in 2 days. So instead of a week from Monday adding the next 112, on Monday I'm going to add the next 112. Or if we have a big down day tomorrow, I'll get back into it. We have plenty of hedges. Okay, in here, the hedges are all fine. We have plenty of put debit spread, put debit spread, put debit spread, put debit spreads. We got plenty of things here. We've also got that 120-day 6 Delta naked put campaign that's rolling in this one. Hey, we're up 25% in 9 days. I'm all good. We got enough uh, potential put debit spreads in here to handle anything. So I'm totally fine. Only have one naked put running uh, left of a 112 because we've been closing them for winners. By the way, the 112 strategy, the 112C strategy is up over $6,000 this year for the year. Okay, so $6,000 to the positive this year, and that's after all of the April shenanigans that happened. The 112C is a very nicely profitable trade this year, despite some other losses that we've had. The 112C, absolutely profitable despite the April volatility and market drop. It's profitable nicely for the year. And like I said, I'm up 6 grand on it. So we're good with the 112s. I really like the 112C strategy. I think that's working great. So we're not going to do anything there. Our gold, 112, this thing's up 45% in 10 days. No, there's just no reason to take it off except hey, if you want to take it off early because you made 50% in 10 days, fine. If not, why not just hang on to it? If we rocket higher, this thing still makes 100%. If we fall lower, we'd have to fall decently lower. We got to drop 10% on gold, but maybe it'll happen. We could fall into the trap. So either way, I'm going to leave that thing working. Like I said, I threw on a couple long trades today because of the 4-hour charts. I didn't really post any of these because I didn't really have time to do that. I didn't really want to encourage a whole lot of just lobbing things, but I jumped into Amazon. I jumped into Google, which is not doing a whole lot of anything. I threw something on Palantir here, which this one I was at the end of the day yesterday, and then Uber has been just sitting here for days. We've been 8 days in Uber, and it's finally just starting to move. These are just little spec things that I just want to create a little cash flow. But let's look at the main thing that we did today, which is the DPST. This is uh, our buy right. So we bought 500 shares. Okay, so we bought 500 shares of this thing at 65 today. It's actually up to 68. Was not expecting DPST to actually go up that well, but it's fine. Okay, it's a little bit more exciting today. Oh, and we just got filled on our 0 DTE for a nice winner today as well. So 0 DTE, 50% winner. Took quite a while today. Took 3.5 hours to make $300. So we'll take it. So another 0 DTE winner came off today, despite the market drifting higher. All right, so DPST, anyway, I bought the 500 shares as I posted earlier for $65. They are at 68. If they stay there, great. If they don't, I don't care. And then I sold, and in the money. So when I bought these shares, they were at 65, but I sold the 60. So I went $5.21 in the money on my covered calls for tomorrow. So I sold an in the money covered call tomorrow for $6. Well, it's 6:05, and we were at that point we were $5 in the money, technically $5.21. Okay, so $5 in the money for $6.05. So I'm going to make $1. Okay, so in one day I'm going to make $1. Is that a great return? I don't know. I did 5 contracts, so I'm going to make $500 on this trade in one day as long as we stay above 60. Well, we're already at 68. So can we crater tomorrow on regional banks? We can. Okay, but I'm going to just book that $500 gain tomorrow at close. So if I get assigned or closed at 100%, either whatever you want to call it, I think that's fine. and we'll take a nice, really a good 2% gain in one day. Okay. So is $500 a big deal? Well, I'm only using this $30,000, which again, this is a hard to borrow. So it's not, these leveraged ETFs are not, uh, they're hard to borrow from Tasty Trades. So they're not great margin trades, but I'm okay with it. I've got plenty of margin because frankly, I'm only at 30% of my buying power right now. So I have money to play. And my goal here, and I'm using the Income Navigator name, is I'm just trying to generate some income daily, weekly here, covered calls, poor man covered calls, selling calls, doing a buy right, zero DTE, whatever it takes. Right now, I'm just a little bit more active than normal. I'm not going to just sit back and be the lazy trader right now because I got some money to make. And I think there's opportunities when VIX is in the as elevated in the upper 20s to low 30s. You got to be very careful. I don't want to ladder on a ton of futures stuff, but I'm okay taking some shots at some things like this. Anyway, this thing's up $300 in about 4 hours. Okay, so we're already up 1% today on this thing. So I've got an order standing at like 60 at 60 to close this whole thing. We're at 59.80 right now. So if we get there, I'll close it at 60. I opened it at 59.16. They'll give me almost my full dollar. It's actually 84 cents times five. So that's going to give me $420 in a day. I'm okay with that. So we'll take the 420 bucks in a day. Uh, Hood was the same type of trade, but what I did here when I posted this for you guys was 2 days ago. But instead of owning the shares like I did on DPST, okay, this is also kind of a buy right type of a trade where I'm not looking to keep selling calls on this forever. I went in the money on this one. I did not go quite in the money so much. I went at the money on Hood, but I bought the leap at 30. That thing's up 700 bucks. And I sold the 44 call at the money where it's well in the money right now. You can see here I took in 570 bucks. There's still 348 of extrinsic. There's still a lot of extrinsic left in this thing for tomorrow. So we should book another 350 bucks on this trade by the end of day to, I'm sorry, by the end of next Friday on Hood, right before we hit earnings. So the goal on this was, again, another small hitter type of trade that I don't plan on just keep writing calls and calls and calls. I just wanted one trade. Okay, right now we're up 9% on this trade. Okay, we've made 286 bucks in 2 days. We're up 9%. Okay, we could just probably bank it right there and move on. Pretty inexpensive trade. We're going to make 286 on $3,500 or about $3,200. So we're almost going to make 9%, 10%. Well, I guess obviously it's 8%. 8% in 2 days, 8, 9% in 2 days. Not a bad return. Okay. Again, small hits, nothing major, not doing anything crazy. IBIT, well, this was an intent at the wheel where I sold the naked put at 45. IBIT has rallied since then. Could I stop out? I could. And somebody, was saying, "Oh, what are you going to do? Hold on for another 30 cents or 10 cents or something like that?" Well, if the intent was wheeling it, yeah, I could take my 90% and go home right now on it, or my 87.7. But since my intent was to wheel it, and I was okay with doing this for over 25 days, I mean, I'm 10 days in. A couple more days isn't going to make a difference to me. And if we crash down to 44 or something, I do want to get assigned on it. I think it's a great price for IBIT, but I could take the 570. So you have 570 here, you got 170 here, and you got 250 here. So I'm just looking at, $1,000 week on just those three little trades. And that's really the goal is little hitters using the strategies we already have, just using them differently. So I hope this is helpful to you guys, seeing what we're doing. QQQ, this is one where I'm owning these leaps for the long haul, right? So I own the leap. The leap is now up 6%. I'm down a little bit on the covered calls because they're in the money decently here, but there's still a decent amount of extrinsic with 1 day to go. I'm going to take the shot that I'm not getting assigned until tomorrow. If I do get assigned tonight, then I'll end up having to close out the short shares that I get assigned. But we're still up. In the last 10 days, we've already made one move on this trade already. So if you have been following along with any of these trades, I've already closed $222 worth of Q, and I'm probably going to book another, I don't know, what, $300 or something like that of extrinsic here. I may take a loss, but the underlying is up 6%. So overall, with this trade, with 14,536 being the value of the longs, the whole QQQ trade right now is up 7% in 8 days. We've made $978. Again, I could close out, I could just be done and then restart the whole thing all over. But right now, we're just going to let it go and we'll just keep writing calls against it. The SPY trade, right? SPY's been on a little bit longer. Now, we did take a pretty good loss yesterday on the covered call because it went deeply in the money. And the new covered call I wrote is already in the money again because we're up monstrously on SPY today. The SPY overall, 48,058 is our goal. We are actually positive on the longs. Okay, so you can see the long leaps, they're actually up $282 since inception. A couple of them are down, a couple are up, whatever. But the overall here, we're actually up. So we're up on these leaps, which is great. Okay, which we just don't want to be massively down on it. We just want to be, we don't need to be up. $248. If SPY doesn't go up another dollar for the next 267 to 400 days, I'll be just fine. It never has to go another place. If it keeps going up, fine. But I've also written even after subtracting the loss on the calls yesterday, I've already written $5,163 worth of call premium. Now, let's say we close these for $300 loss. I'm still going to be up like $4,900 in premium plus uh, the fact that the underlyings are actually positive. So we're up over 10% on this trade. So total cost of these leaps, you can see over here on the right, about $48,000, 47,780. So about $48,000, and I have now booked $5,163. So we're up 11% in 79 days. 79 days is a little over 2 months, not quite 3 months. So a little over 2 months, and we're up 11%. Well, my goal is 3% a month. And in one of the worst 79 days that I can remember for these trades, we are up 11%. Totally fine. Loving the SPY trade in here. All right. Last thing I wanted to do before we wrap up today, and again, hopefully you guys got a bunch of things out of this, but this is how you can use either covered calls, poor man covered calls, leap trades, or owning the stock, doing buy rights. There's just a lot of different things that you can be utilizing that's in your arsenal here, and you can use them on different time frames. That's why I wanted to show you the 4 hour chart versus the daily and the weekly where we normally are, because I'm looking for shorter term trades to make some cash, like this DPST thing, where hey, now we're up $311 in 4 hours. Okay, and you add that to the SPX zero DTEs on the session today. We're having a good day. Okay, you can see the green, so you can see we're having a good day. I just want to have good days and good weeks going forward, where I'm adding little bits, okay, little bits of cash to the account on a very steady basis. So I want to put one more trade on. So let's get a trade on before we go. And I really wasn't sure where I wanted to go with this trade. And one of the trades I looked at was MicroStrategy, which I don't know. Is it crazy? But I looked at the charts and I looked at where MicroStrategy is, and it is another one of those difficult to trade, highly volatile. I looked at MSTX as well, which is the 2X. It doesn't save me a lot because MSTX is hard to borrow underlying for tasty trade. So it's not going to give me a lot of relief. So the question here is, do you want to actually do a buy right on this thing with 1 day? I don't know. Is it worth it? We're getting close to the end of the day, so it may not be worth it here. But if I bought 100 shares, it's going to cost me $19,000, okay, to own 100 shares of this thing. Could you do the leaps? You could. Uh, you could also buy the leaps instead. Are they going to save you a whole lot? If we look here and we go down, I want something like that 80+%. Okay. Even if I bought the 245s, it's going to cost me 14 grand versus 18. It's not a huge savings. So I think I might want to own the shares. And if we bought these shares, and I don't, this may not work because I looked at it earlier, but let's say, and this thing can move. I mean, MicroStrategy can move gigantic chunks uh, in a day. So we could absolutely crater tomorrow. But we've had a nice little pullback today. If I sold, let's say the 340s, I'm going to sell again, an in the money buy right. Okay. I'm going to take in 800 and 900 bucks on this particular call here. But you can see my extrinsic value is 270, which means I'll make 270 bucks tomorrow as long as we stay above 340. And we're at 346, so we still have to drop $6 tomorrow. MicroStrategy can drop $6 in an hour, much less in a day or so. 1 day is not the greatest trade. But next week is earnings, and I don't want to do it. The goal here was, can you make little bits of cash on this thing? If you went down to 335, I'd still make 186 bucks, and now I'm giving myself a $10 cushion on MicroStrategy. Is it worth it to do that? So we could put this potential trade on, but hey, you want to make 166 bucks, if we drop past this, am I willing to hold MicroStrategy? And technically, I do like it. So it's another potential trade opportunity. So MicroStrategy was one. I'm looking at things like IBIT as well, because I do like Bitcoin here. I don't love the small amounts here. I would have to do too many shares on it, so I don't like IBIT. I don't want to trade the trade. That was at least an initial thought. If we were doing it for next week on MicroStrategy, okay, I could still buy the shares. We have earnings on the first. I could sell the second, but I might not get the decay that I want. But if I did buy the shares, I could actually drop to the 320, okay, which is $25 below where we are now on that same, and collect about 460 bucks of extrinsic by next week, and give myself a $25 cushion. And if we get called away, they're just going to take my shares, and I'm okay with getting my shares called away, because if you close me out, I'm going to be even in better shape on it. So this would be a potential opportunity to buy the shares. Oops. Sell the 320 for next week. I don't want to hold over earnings. Okay. And that means I'm going to be buying in at somewhere around 315 bucks. If it stays at 345, we're going to be in pretty good shape, because we're owning this thing at a pretty nice discount lower. And we can make, as long as we stay above 320, we can make 461 bucks. If we drop 25 points before earnings, the question is, how much will this premium come out with earnings next week. It might take some time. All right, does this make sense? So if you wanted to, do something here, let's put it, let's just put an order in. We'll see what happens. But I wanted to at least use it as a demo to show you guys how potentially you can sell in the money buy rights on stock and still make a little bit of money on that. So we're looking to make maybe $500 on this trade by next week. I'm only doing one share, so I'm doing a big chicken thing here where I'm not going hog wild. Anyway, hopefully this makes sense. Just trying to scrap together little bits of income throughout the week or weeks. And that's what these poor man covered calls do. They've been just generating extrinsic value every single week as we go. So we'll see if we can get filled on this thing. Maybe, maybe not. On MicroStrategy. If we do, we do. If we don't, I'm not going to chase it. I just want to give you a sample of, hey, what if we put this trade on with an in-the-money call, and if we get called away, they take my shares? I'm beautiful with that. Okay, you can take my shares down at 320 is where I'll get assigned. Okay, so I'm going to take the loss on that, but I'm going to make $30 on the covered call, so I'm going to lose 25 on the shares, and I'm going to make $4 or $5 on the covered call. So I'm going to come away with $500 if somebody wants to take this thing early. All right. So I hope this makes sense. We can chase a tad. So we'll see. All right. I hope this made sense. Just keep plugging away. You got to stay consistent. And I think that's really the key to trading out there is consistency. Oh, there we go. We just got filled. Okay. So we want to stay consistent on trades. You can't get, oh, I just took a bunch of losses and I'm never going to trade again. You can, okay. And you shouldn't revenge trade, but you've got to be consistent. Now, it doesn't mean go back and throw all 80% of your buying power back in trade. You can baby step back in. Okay. Look at your plan. What did work, what didn't work. We fixed what didn't work. But we look at what did work. The 112 Cs, the 112 calendarized, worked like a champ. Okay, we're up on the year. Love that trade. It worked great. The SPY leaps, it didn't work great because of the vol explosion that we had and the drop in the market. But why was that? It was because I didn't have the temperament and the buying power to hold on to those trades at a 2x loss in this size account. So it allows me to, okay, and I don't want to do that with the ES 112 trades because it's too many laddered trades of the same underlying. Okay, fixed it, went to the poor man's covered call, and we'll do that instead. It still generates nice cash flow, gives me positive Vega. My Vega in my accounts is awesome right now. In fact, my Vega is a positive 275 in my accounts right now. Okay, and you can't beat that. Okay, so positive Vega in the accounts, and then we're still doing Strangles. I just haven't found them. I'm still doing spec trades, and we're still doing also 112 spec trades on other futures, and I'm still doing the 120-day 6 deltas. Okay, all of those things held up great. They did exactly what they were supposed to. Okay, what didn't work, we kick it out, we make an adjustment, and we stay in, but we got to stay in the game if you want to make the money. All right, we'll see you guys later. I hope this was helpful. We'll see you. Bye-bye.